Welcome to The Explainer. Okay, today we are decoding what is, seriously, one of the most important documents in any estate. Think of it as the final storybook of someone's financial life, and we're going to break down exactly how that story gets told. So, before we dive into all the nuts and bolts, let's just start with a big picture question, right? When it's all said and done, how does a person's entire financial life get, well, formally wrapped up and accounted for?
Well, the answer is this one document, the Liquidation and Distribution Account. We'll just call it the L&D account. And yeah, for our purposes today, let's stick with that idea. It really is the final storybook. This is the official report that goes to a government authority, in this case, the Master of the High Court. And its whole job is to prove that every single cent has been accounted for.
You know, every good story needs a cover page, right? Something that tells you what you're about to get into. Well, in the L&D account, that's called the preamble, and it's what sets the stage for everything else.
So this first bit is really all about context. It tells you who the story is about, the deceased's identity. It confirms their marital status, which is, and I mean this, absolutely crucial for all the calculations later on, especially if they were married in community or property, that legal status where spouses basically share everything. It also has the official case number and says whether this is the first and final account.
Okay, let's get into the first major chapter of the story. This part is all about balancing the books, taking stock of all the numbers. This is where the executor lays out the entire financial picture exactly as it was on the day the person passed away.
And to really get how this works, there's a fantastic analogy in our source material. The best way to think about it is like a formal ledger, like a book with two sides, a left and a right, and each side tells a very different part of the financial story.
So here's how that actually looks. On one side of the book, you've got all the assets. That's everything that was owned. Houses, cars, stocks, even money that was owed to the estate. And then on the other side, you have the liabilities. This is everything that was owed. Mortgages, funeral costs, credit card debt, you name it, plus the executor's own fee. It's literally a complete inventory of everything.
And when you take all those assets and subtract all those liabilities, what you're left with is probably the single most important number in this entire document, the net value of the estate. This is the bedrock. It's the number that everything else is going to be based on.
Okay, next up, there's a section called the recapitulation statement. Honestly, the easiest way to think of this is like a quick cash flow check, almost like an executive summary. It just looks at the cash that came in versus the cash that went out to pay immediate bills. And the whole point? It's to prove right then and there that the estate is solvent, that it can actually pay its debts.
All right, now we get to the part of the story everyone's been waiting for, the climax. This next section, the distribution account, answers that one big question. Who gets what? See, this is where it gets personal. It's not just about abstract numbers anymore. Now it's about fulfilling a person's final wishes. The account will literally reference the will, clause by clause, to hand out specific assets to specific people. Just like you see here, per clause 4 of the will, the VW Golf goes to Lorado Smith. It's that specific.
And this is why having a will is so critical. Look, if there's a will, the executor's job is straightforward. They just follow the instructions. But if there isn't a will, well, then the estate is called intestate. And that means the executor has zero choice in the matter. They have to follow a very strict, rigid legal formula called the Intestate Succession Act. And that law dictates who gets what.
So just like any good book, our financial storybook here has a few appendices at the end. These are the sections that tie up all the loose ends, They cover the fine print, handle things that happened after the person passed away, and they make sure everything is perfectly accurate. First up is the income and expenditure accounts. And this makes sense, right? Because an estate isn't just frozen in time. While the whole process is happening, property might be earning rents or investments could be earning interest. So this account just tracks all that new money coming in and any new expenses going out. Whatever's left over, the net income, gets added to the pot for the heirs. Then you've got something called the fiduciary asset account. Now this is a really special section. It's for any assets the person was holding for someone else. So they didn't technically own it, but they were legally responsible for it. Maybe they were a trustee, for example. These assets are kept totally separate because, well, they don't belong to the estate. They just have to be passed on to the rightful owner. And last but not least, you have the taxman section, the estate duty addendum. This is literally the tax calculation for SARS. And here's the kicker. This section has to be filled out, even if it's obvious there's no tax to be paid. You have to show your work, basically, and prove that all the right deductions, like the big R3.5 million primary rebate, have been applied.
And with that, we've pretty much reached the final page of our storybook. This is where the whole thing gets signed, sealed, and delivered. And it's also where we learn a really critical lesson about just how precise this whole process has to be.
Every single one of these accounts has to end with the executor's certificate. And you have to understand, this is not just a simple signature. It is a formal declaration made under oath. The executor is putting their name on the line, legally, swearing that this document is a true, proper, and complete picture of the estate's finances.
And this brings us to a fantastic pro tip that just shows you the insane level of perfection required here. Remember that net value from the beginning and the total value of everything given away in the distribution account? Well, those two numbers have to match perfectly, down to the last cent. If they are off by even 1 cent, the entire account will be queried and sent back. No exceptions.
So, what's the big takeaway here? The L&D account, it's not just some boring bureaucratic form. Not at all. It is the definitive, final story of a person's financial life, one that's been meticulously put together and is legally binding. And that really leaves us with one final thought, doesn't it? Now that you've seen how this final chapter gets written for someone else, have you given much thought to how your own story will one day be told?